Hi guys, so this is the next video in the chapter 15 series. So today we'll be looking into securities exchange in the share market and the benefits of them. Now let's look into some securities that are exchanged in Colombo Stock Exchange. Ordinary shares, preference shares, share warrants, corporate debentures, government debt securities. Now let's look into each of them individually. Ordinary shares. The investors become owners of the company through buying these shares. Though the investors who purchase ordinary shares are entitled for a certain percentage of profit that the company earned, they are not entitled for a specific percentage of dividends. Therefore, the risk is higher. They get the chance to participate in the annual general meeting. They acquire the administrative authority as well. There are two kinds of ordinary shares: voting shares, non-voting shares. So, although the non-voting ordinary shareholders are not entitled for any voting, they enjoy all other privileges entitled for ordinary shares. Preference shares. The shares that are entitled for a specific dividend and priority in refunding the capital at an occasion of dissolving the company are known as preference shares. These shareholders do not gain the ownership of the company. The risk is low. They do not acquire administrative authority. Share warrants. A document issued by a company assuring the right to purchase the shares at a specific price in future is known as share warrant. Until this share warrant is converted into shares, benefits other than capital gains cannot be enjoyed. Corporate debentures. These are special securities issued by a company to obtain the loan capital. Listed debentures issued by listed companies can be exchanged in the Colombo Stock Exchange. The investors of debentures are entitled for a specific rate of interest. Government debt securities. The treasury bills and treasury bonds issued by the CBSL on behalf of the government are known as government debt securities. These are considered as investments with minimum risks. The government issues these securities at various times with various interest rates. Now let's look into some direct and indirect benefits gained by investing in securities exchanged in the share market. Direct benefits. Dividends. The amount distributed among the shareholders from the net profits earned by a company through its business operation is known as dividends. Dividends are declared as a financial value or as shares. When the dividends are declared as financial value, they are declared as the monetary value per share. Like for an example, 2 rupees per shareholding, etc. Interest. The companies pay an annual interest rate to the investors that have bought corporate debentures issued by those companies. The interest rate paid for debentures are fixed. It is declared at the time of issuing debentures. Capitalizing of reserves. Here the reserves of the company are converted into share capital. The existing ordinary shareholders receive these new shares according to a certain ratio. When capitalizing the reserves, the declared capital of the company will be increased. For this process of capitalizing of reserves, permission from the Colombo Stock Exchange should be obtained. Rights issue. The existing ordinary shareholders of the company are offered again the shares at a particular proportion. The investors get an opportunity to purchase shares at a price which is lesser than the market price. This creates an opportunity to buy shares at a lower price and sell them at a higher price at a later date. Capital gain. If an investor sells the shares higher than their buying price, they make a profit out of it. And that's what is called as capital gain. For an example, if a person who has bought a share at rupees 30 sells it for rupees 50, then he has made a profit of rupees 20 per share. And this 20 he made out of this is known as capital gains. This is the most attractive benefit that investors receive in the share market. Indirect benefits. An ordinary shareholder is entitled to be appointed as a director of the company and also gets the voting rights to appoint a director. These securities can be used as collaterals when obtaining loans. The risk of investing in government securities is low and liquidity is high. Capital gains are free from taxes. So that's it with this video, guys. Please do like and share to learn and let others learn. Thank you.
Created using Powtoon.